sir, thank you, first of all, for joining us here on the program. Are you confident that we're over the worst? It does seem that you have really two camps. Some saying, well, we can't cry victory too soon. The others saying, guys, it looks like the economy can also beat its own forecast in terms of growth.
Well, among those that say we're in year 3 of the crisis, we're not in year 1 after the crisis. So we still have a lot of work to do. The economy took a really steep fall. It's been stabilizing. It's been recovering somewhat at a modest pace. It will be a protracted recovery, and it will continue slowly. So we will only be back to the level of real income we were at before the crisis in 2 to 3 years. So if you call that a good development, yes, we are in a good path, but we still have some bad time behind us, and we're not totally done.
The main concern, of course, is Greece and the fact that this country may default. What are your thoughts on that? A, is this a possibility? And two, what can the Eurozone do not to lose this member?
No, I think that's an absurd hypothesis to really think that there is a problem, a real underlying problem. There is a problem that there has been too much debt accumulated, partly also as a result of the crisis, partly as a result of structural weaknesses. Competitive situations have been diverging in the Eurozone, and governments, not just Greece, but other governments in the Eurozone are in similar problems. They have to address the consolidation issue for fiscal policy. They have to address the competitiveness issue for the industry. And there's going to be a comprehensive reform package they have to embark on. I'm confident that they will do this.
Sir, just to understand that so that we're on the same page, so you think that the fact that Greece can default is absurd? We shouldn't be even talking about it at the moment.
Well, you know, the Eurozone has no problem. The currency has no problem. Some countries have excessive deficits. We have a procedure in the Eurozone how to correct these excessive deficits. Greece has embarked on that path. They have committed to do that by 2012. And they now have to deliver what they promise. And I see no problem at this point to really question that commitment.
Now, if we do see a somewhat fragile recovery, what does it mean for exit strategies for the European Central Bank?
Well, our exit strategies, I think you have to make the distinction, as we do, between interest rate policy, which is geared at inflation risk. We don't see those at the policy-relevant horizon at this point in a reasonable and sizable manner. The other is exit from exceptional measures. Now, we've always said the exit is partly built in, because not prolonging some of the special operations, and we've started not prolonging the 12 months and the 6 months has been announced, is part of the exit. So we're in the middle of that exit program.
But when do you actually expect the ECB to return to normal refinancing operations as a whole?
Well, I think, you know, we already announced at the end of the year we will take back some of the exceptional lowering of credit standards in some operations. We will have to discuss during this year the return to normal tender procedures, which is a big step, and it will not occur in all operations simultaneously. So it will be a gradual, phased in, and depending very much on the financial markets recovery program. It's not time dependent, it's state dependent. As the economy improves, we will take some of the exceptional measures back, look how the economy withstands that, and then discuss further measures.
But as things stand, are we looking at the second half of the year, or are you also optimistic that maybe it could happen a little bit sooner?
I think it's going to be a gradual progress over the entire year. The 12 months, the largest tender we ever did, runs out in June. We have to have some measures in place then, but not all measures are needed to the same degree. So I don't rule out that we take some additional steps even before the second half of the year.
So for the overnight rate, when would you like to see that moving up to the deposit rate or from the refinancing rate?
Well, I think that will happen gradually. Again, you know, it's not a time-dependent path. It will happen as measures are phased out. The big driver of lowering rates to the deposit rate was the full allotment over 12 months. And we still did one in December, and that liquidity is going to remain in the market for most of the year. So over the year, this will gradually happen as measures are phased out, and it's going to be a slow process. It's very hard to say in terms of timing how exactly that's going to go forward.
I was going to ask you, though, exactly what elements are you looking at to phase this out? Because a lot of the criticism, not only for the ECB, but really for central banks in general, is that there's a very unclear view about when exactly this will be put in place.
Well, I think the full allotment mode was the biggest part of that lowering of short-term rates. As we've already announced, that full allotment mode for the 12 months and the 6 months procedures are not going to be available anymore. We're going to see much shorter time horizons for refinancing. And as we go back with those shorter operations, 3 months, 1 month, to tender procedures, that's going to move rates up. But it's going to happen over the year. It's very hard to say at this point when, because it depends on the state of the financial markets.
Are you concerned that the ECB inflation forecasts are on the soft side?
Well, what we said is at the moment our inflation forecast for this year is around 1%. In the coming year, it now looks a bit between 1 and 1.5%, and there are upside risk. You have to consider that part of the consolidation involves VAT increases in some countries, administrative costs are going to go up. So some measures are going to move inflation up. But we don't expect inflation to significantly surpass 2%. So what we're seeing is in line with our definition of price stability. And on that end, I'm not concerned. We think rates are appropriate at this point.
So there's also a lot of speculation, of course, on the succession of President Jean-Claude Trichet. Is your name in the ring?
Well, we have a very good president. His name is Jean-Claude Trichet. I think there's no need to say anything else on that.
Anything, I mean, something that you'd like to add?
No,
Not for
he's
now.
a great president, and I admire his job, and we have a big job in front of us.
All right, Mr. Weber, thank you so much for joining us.